money in the pockets of people that don't fit well into the market system.
At 21, you may have no clue how to earn your income, and you typically don't save anything. If you start saving at this age, chances are you won't have enough to do so steadily. By the time you're 28, things get a bit more complicated. Maybe you're living alone in a new place and earning your income, or perhaps you just graduated from college and are making a good amount of money but not quite ready for an apartment yet.
And you would be earning something comparable to most of the people around you.
While you can't exactly predict the future, it is possible to know what your financial goals should be. By the time you're 35, money should be a simple thing. You should earn more than you spend. But things are different, and you're broke at 35. Don't freak out. In Berkshire Hathaway 2025 annual letter, Warren Buffett said, "Recognize your missteps early, then pivot decisively. Every loss is a lesson if you learn from it." In today's video, I'm going to take you through 5 steps that will change your financial future at 35 and make you retire with privileges. Feel free to tell whatever step you did in the comments section so that other viewers can understand and be inspired by how this YouTube video influenced your life. Well,
You have to do that, and you have to have the attitude that you're buying part of a business.
Step 1. Understand your attitude. All of your 35-year-old buddies live luxuriously, have many income streams, and are probably demonstrating their success. You'll be taken out for a drink and possibly hit the gym in their new Porsche when drinking the beer. Presumably, you then believe that success is reserved for the selected few because you are depressed, desperate, and presumably still live in your parents' basement where you have no job or money to go out. Well, regarding self-improvement and growth, we all have ways of getting better, saying things like, "I can't do this," orient. "Nothing good has ever come from my failures," are surefire ways to miss out on an opportunity of what does happen when you take a risk and strive for excellence. It's not about being perfect, about yearning for perfection. Well, success is not for the chosen few, and it's for the few who choose. Don't berate yourself. The financial attitude is an important contributor to your success at 35. A good attitude will affect good behavior, which is necessary to accomplish a well-managed financial life. Proper planning and a good mental attitude can help you achieve your goals. Good actions or disciplines are followed by proper financial management to create a solid foundation for your life and family.
Changing your mindset from saving to spending in retirement.
Step 2. Spend less, save more for retirement. Friends are often the most influential people in our lives. It's not always because they're powerful or rich. Sometimes we want to be like them or do things like them. Buying fancy things, going on crazy trips, and spending money, that's how we are exposed to some of the poor financial habits of others without even realizing it. The first step to successful saving and investing for retirement is getting a clear, realistic picture of what it is you want for yourself. And more importantly, how much money do you need? Well, if you're worried about having insufficient retirement savings or can't afford them, don't feel like your only option is to stop investing. While it's true that retirement only happens after a while of hard work, if you've been putting things off, then you might as well put them on pause and spend this time building up your account. With inflation and taxes eating away at your account over time, it's critical to start saving sooner rather than later. If you have the willpower to start, stick to it, because there's a good chance that these retirement plans will last longer than you expect. So, what's next after saving? Step 3. Open a retirement account. Don't be worried, it's simple to locate the right sort of retirement account for you. We all want to save for our retirement and live the life we deserve. But saving isn't enough. You could pursue other ways of saving, like an employer pension or employee stock ownership plan, ESOP, that offer tax breaks right now and higher contributions made by your employer in the future. But you're already saving in an employer plan up to the match. Or if your employer doesn't offer a plan, your best course of action is to open an IRA. An individual retirement account, IRA, is a retirement savings vehicle. An IRA lets you invest money with various investment options, including stocks, bonds, and mutual funds.
401k and 30% outright and so on like that. Just look at the whole picture and decide.
Like your 401k plan, without being locked into one company or product. With an IRA of your own, you can customize your portfolio to work with your financial needs, risk profile, and retirement goals. So, what's needed? You need to earn taxable income to open a traditional or Roth IRA. There's no age limit for opening or contributing to an IRA. They're accessible and easy to set up. If you prefer working with a financial professional, I can help you manage your retirement account with an automated approach. Step 4. Invest. What do you do to ensure that your pension pot is invested in income-generating assets? Investing in bond funds, income, and multi-asset funds is a good option. You could buy government or company bonds or shares that pay dividends rather than funds. The returns on these investments won't be as high as investing directly into a property, but they will have a low risk of losing money due to inflation. For those seeking to take control of their financial future, platforms like Interactive Brokers can provide access to a wide range of investment opportunities, allowing individuals to participate in the market and potentially build wealth over time. Click the first link in the description to learn more. Here are safe stocks you should invest in when retiring. Number 1. UGI Corporation. UGI is a regulated utility and distributor of propane, natural gas, and electricity. The company maintained a consistent cash flow during the financial crisis that occurred throughout the pandemic of 2020 as people continued relying on gas and propane. The company plans to rely less on fossil fuels and move towards a cleaner future using gas harvested from landfills. Number 2. United Parcel Service, UPS. Cash flow is the lifeblood of any business, and UPS has been a go-to company for investors searching for this characteristic since 1943. UPS has grown its dividend a whopping 53 years in a row, but it doesn't end there. UPS has also paid dividends to shareholders every year since 1969, contributing to its consistency as a dividend champion and adding to its wealth over the years. And lastly, Chevron, CVX. Chevron has a history of raising its dividend for 35 consecutive years. The company's current dividend yield is 3.12%, making it one of the best performing stocks in the entire S&P 500 over the past decade, and its price-to-dividend ratio currently sits at 1.59, making it a good value right now. Chevron shares have seen roughly 15% average annual returns over the past decade. Given that oil prices are expected to stay hot over the next few years, and with very little change in production levels, this stock could easily see similar or better results. If stocks aren't a go for you, then invest on real estates. There's big money to be made in renting out property. Whether you have the cash to buy or own it or have to rent it out, this is a solid investment that will help you earn additional income. If you can handle the work and the responsibility and commit to being a good landlord, this could be the best way to make money while retiring. Well, retiring at age 65 is still a long way off, but the longer you can plan for it while at 35, the better. While risky equity investments might make for thrilling stories, they can also be dangerous for your retirement savings in the long run. So, if you can afford to put a portion of your portfolio in solid stocks through dividend-paying companies coming out with products that keep customers happy and loyal, or in other words, businesses whose products or services are improving people's lives, then you'll have less chance of running out of funds as an older adult living on less income. If you aren't sure about stocks, bonds, or real estate, then consider subscribing to this channel and turn the notification button on. I will guide you with more tactics for building your financial future when retiring with my daily lessons. Moving on to Step 5. Create a side business. A side hustle is a means of earning additional income on top of your day job. You can do this in many different ways, from freelance work in your free time to selling products online or taking on a nighttime gig. The main thing is that you have a plan and have time to dedicate to it. When you don't rely on your day job for income, you have more financial freedom and flexibility in your life. You can build a side hustle income stream by investing in a business or selling a product that makes money. Ideally, you would use this extra income to pay down debt, grow your investment portfolio, or save more money overall. If you channel this extra income into your financial goals, it could allow you to retire comfortably sooner rather than later. So, how do you find a side hustle? What do you like to do in your free time? Is there a way to monetize it? Would you still be happy doing this hobby if it turned into a side hustle? Also, it would be best to consider your reasons for starting a side hustle. Are you looking for something lucrative? Orient. Do you want to build your passion project even if you don't earn much money? Before diving in, make sure you are clear about your financial goals or a side hustle. Well, retirement planning is more than a numbers game on paper. The goal should be to create wealth that lets you live life to the fullest, even if you cannot spend it all on your favorite things. That's why financial planning is as important today as it ever was, and why it's critical to understand how many different retirement accounts are available so you can determine which ones work best for you, depending on your goals. And because you stayed with me till the end of this video, here's a bonus for you. Here are small lifestyle tweaks that will pave the way for big life achievements at 35. 1. Set realistic goals. Today, young people below the age of 35 are living on a tight budget. They are called Generation Squeeze. They have low incomes and are under a prolonged economic crisis. They are in debt and struggling with school loans and family difficulties. Another aspect of unrealistic goals is setting too high standards with no timeline and no action plan. On top of that, many people today tend to consume more than they earn, pushing them into debt. Initiating a financial plan is not enough. One has to take action towards that goal. 2. Avoid procrastination. Procrastination is something we all experience. It's inherent. The first step to overcoming procrastination and taking the right steps toward your financial goals is acknowledging it. Procrastination can hinder financial success because it is an obstacle to getting things done. Additionally, overthinking all aspects of your financial future can lead to anxiety and stress. You're now 35 years old. Now look at yourself in a mirror as you read this. What does that tell you about how you live? How can there be a better life if all your habits are damaging? Habit change is a powerful tool for personal growth. Many people do not want to change their habits because they have developed these habits over the years by becoming accustomed to them. Successful people consistently work on their habits. No matter how hard you try, you will not change overnight. But as the sun rises and sets in the evening, habits need time to form and pay off. Learn new habits in your daily life. If you are concerned about your financial security and are thinking about investing, check out the first link in the description. It's the platform I use, Interactive Brokers. Click the link to learn more, whether you're young or old. We hope you found this video helpful. If you did, please like and subscribe to our YouTube channel so you don't miss out on future uploads.